Good afternoon, everyone. My name's Fritz, and I'm doing grain analysis. We're looking at the February 10th USDA update for supply demand. A few surprises. Starting with the corn market, carryout projected to come down by 50 million bushels. This is due to an increase in ethanol usage of 75 million bushels, but feed grain usage is going to decline by 25 million bushels. So there's your net change of a 50 million bushel reduction in the carryout. Exports have been left it unchanged. Looking at a stocks to usage ratio, 13.3%, down from 13.8%. Looking at the world numbers on corn, we see the production on world corn increase by about 3.2 million tons, and the world carryout for corn goes up 490,000 tons. The primary reason for that increase in the world carryout is increases in production from the Black Sea area, and the Black Sea area, should be noted, that is U.S. competition for corn, U.S. corn exports. So numbers come in a little bit lower than expected. We've had a bit of a muted reaction. Corn prices are a little bit better. In the grand scheme of things, however, and domestic market really doesn't give you higher prices for corn. We need export to kick in, and so far that really hasn't happened. So for the near term, based off of this report, we feel that corn prices are going to remain trading range bound. Moving into the soybean market, a little surprise there. Your soybean carryout comes down 25 million bushels. The trade was looking for a 15 million bushel reduction. Basically what we did is we raised the crush 15 million bushels. We raised exports 20 million bushels, but we lowered imports by 10 million bushels. So there's your net result of a 25 million bushel carryout. Stocks to usage ratio comes down from 11.1% to 10.4%. That's still a big number. Looking at the global soybean production, we see it rise by about 700,000 tons, but the global carryout on beans comes down about 1.5 million tons. So yeah, the numbers on the surface seem a little bit friendly, but in the grand scheme of things, once again, these are big numbers. So in the soybean sector, similar to the corn market, best case scenario, we're going to be range bound for a while. We still have just too many beans out there. Moving into the wheat market. A little bit of a surprise, higher carryout than expected. The U.S. wheat carryout rises by 5 million bushels. That is due to wheat exports being lowered by 25 million bushels, but they also lowered imports. Yes, the U.S. does import wheat. We lowered U.S. imports of wheat by 20 million bushels, so there you have your 5 million bushel increase on the U.S. wheat carryout. The bigger number in the wheat market is the world numbers. World wheat production increases by just about 2 million tons. Your world wheat carryout increases by 1.85 million tons. Bottom line, the world has too much wheat around. So I think the wheat market will continue to languish. I believe it will be the recipient of the short side on bear spreads, long corn, short wheat, long beans, short wheat.